Hello everyone and welcome to the State of European Mobility Startups 2023 official release webinar by VID and Deal Room as per usual. I'm Jenna, Communications and Events Manager at VID, Mobivia's Mobility Startups Investment Fund and Startup Accelerator. I'm very happy to be here today with Églantine Dupuis, Innovation Analyst at Deal Room, and Vincent Cabanel, Deal Flow and Startup Acceleration Manager at VID and also co-author of the report. Other guests will also be joining us throughout the webinar. So we are super excited to be here today as this year marks the third edition of the report, which is the very first and only data-driven analysis dedicated to the European mobility ecosystem. Since it first came out in 2021, it has been downloaded thousands of times by journalists, investors, corporates, and startups from all around Europe. So the main subject we're going to talk about today is what happened in the European mobility ecosystem in 2023. But before we start answering that question, let's get a little bit of context first. So 2023 was a unique year in the global and European VC markets, marked by a 37% decrease in VC funding levels for all sectors. This contrasts significantly with the post-pandemic period, which we all remember about the year of 2021, which saw a record level of 14 billion euros in funding for mobility. This figure was driven by two main factors. The first one being the easier access for startups to go public through SPACs, so special purpose acquisition companies. And the second one, the record inflation in valuations levels, especially to fund startups in logistics after a nearly stagnant year in 2020. Many startups in the quick commerce space disappeared. In 2022, the market showed resilience, with investors choosing to fund mainly electric mobility startups, including, for example, Einride, who became a unicorn, Electra, or even Northvolt. So a higher proportion of the funding was allocated to electric mobility startups. However, financial markets were somewhat frozen, especially partly due to issues related to SPACs. Mobility startups appreciated this model because it provided with substantial liquidity for significant investments, especially in hardware. Unfortunately, most of those companies faced difficulties leading to a complete closure of financial markets. Examples include Kazoo or even Helbiz, who both experienced an almost 100% decrease in their stock prices. So that was a little reminder of what happened in the previous years. So now, what's the story for 2023? What happened in the European mobility ecosystem? What choices did the investors make? Did Europe maintain its position as the most innovative geography? Those are some of the questions we'll be answering today. To do so, we'll start with a quick focus on the European Startup Prize for Mobility 5th edition with Vincent. We'll then get straight into today's main subject with the report presentation with Vincent Steele, Églantine, and Martin Viel, partner at Clipperton, who will also be commenting on the report. Theodora Preda, Ventures Director at Startup Autobahn, powered by Plug and Play, and Lucas Lowers, investor at Rethink Ventures, will then join us for a nice fireside chat. And last but not least, we'll be getting into a 10-minute Q&A session. You guys can ask your questions throughout the webinar in the dedicated section, and you can also introduce yourselves now in the chat section. So without further ado, let's get started. Vincent, the floor is yours.
Good morning, everyone. I'm super pleased to be here with you. But as Jenna said, we'll just start by presenting some key insights coming from the European Startup Prize for Mobility. The European Startup Prize for Mobility is Europe's biggest acceleration program for clean mobility startups. It was co-founded in 2017 with Karima Delli, which is the chairwoman of the Transport and Tourism Committee at the European Parliament, and VID. Last year was the record for every edition of the European Startup Prize for Mobility. We collected plus 700 applications spanning 39 countries. more than 100 investors were involved in the process for selecting first top 50 startups that went through a strict and rigorous evaluation process that was designed and led by VID. And from that pool, we identified a top 10 startups that actually benefited from the program. So why talking about the European Startup Prize for Mobility? Well, it's interesting to make a focus on that in the sense that it gives a focus, a snapshot of what is the current state of the innovation in the European mobility landscape. So let's jump into some interesting figures. We are super proud to say that more and more women are involved in creating mobility startups. From the plus 700 application pool, a third of them were funded by gender balance team, which is interesting. And again, we're super proud of that because it's way above the market average, which is around 10% for the key strategic markets for all sectors. Another interesting figures to look at is that startups clearly embrace the need to decarbonize mobility. 63% of them are developing solutions that help to decrease the carbon emission of mobility. We all know that here, transportation accounts for 30% of the total greenhouse gas emissions, and thanks to innovations, we can identify real solutions to meet that challenge into getting to a net zero mobility. As I said, 39 countries represented, but we can see on the right-hand corner of the slide that we see the usual suspects, if I call it like this, in terms of countries represented, the Nordics and the western part of Europe. But Israel also was quite represented in the application pool. Talking about maybe the characteristics of the model and the transportation they're working on, we see that product-wise, software is the most represented product with just over 40%, followed by the services and the hardware, which is something that we know is very difficult to find, but I'm sure Eglantin will have a great story to tell about the findings coming from the report. And also, interestingly, the main transportation mode that is tackled by EUSP candidates is the automotive sector. Definitely, this is something that drove a lot of innovation. It is followed by the micromobility. As I said, this pool was evaluated by plus 100 VCs that contributed to assess all these interesting startups, and we identified actually a top 10 that is finishing its acceleration program. So let's take a look at this startup. We have About Energy coming from the UK, C2A Security coming from Israel, Clearly coming from the UK, Elon Road, a Swedish-based startup, Anywhere coming from France, Me Energy coming from Germany, Hideaway coming from France as well, Stellar is a Luxembourg-based startup, Vaphaus representing Finland, and Wanda from Norway. Every investor that were involved in the evaluation process will have a chance to attend the official online demo day of the European Startup Prize for Mobility that is planned on March the 14th. And cutting to all investors here that are listening us, if you want to be part of that demo day and to have a chance to engage not only with the top 10, but with the top 50 startups, through an online platform that will allow you to connect and engage with a startup, feel free to drop me a message.
Thank you very much, Vincent, for this interesting focus on the European Startup Prize for Mobility. We'll now move on to the next part and get into the report's insights. Eglantine, what can you tell us about the European mobility ecosystem in 2023? And you can, of course, introduce yourself in Dilbrum first before answering.
Thanks, Jenna. So I'm Eglantine Dupuis. I'm an innovation analyst at Dilbrum. Dilbrum's a global database of startups and growth companies. And we work with top organizations, entrepreneurs, governments, investors to try and provide some transparency and some insights on a variety of ecosystems and industries, of course, one of them being mobility. So we can get into it now. So we found that in 2023, 9 billion was allocated to European mobility startups, which is a 26% drop from the previous year, but still holds up a lot better than previous to the 2021 bubble that we mentioned earlier. And if you can see here in the buckets of rounds, in late stage rounds, which are rounds above $100 million, this is what dropped a lot. The most, and this is further emphasized when we look a bit more granularly at the early stage. Here you can see seed and Series A. Series A held up a lot better than most growth and late stage rounds. Here are just a few examples of companies who raised early stage rounds in 2023. Next, we find that what makes up the most of mobility funding in 2023 was actually EV charging and EV battery solutions, which of course we know are very infrastructure and capital intensive. So of course they do need a lot of investment, but it's also a very important topic, as we mentioned, for decarbonization and has been growing and been talked a lot about in the recent years. They've actually increased 5-fold since pre-pandemic levels, which is very impressive. Next, to put it a bit into perspective, where does mobility fit into all of this European ecosystem? Well, they actually rank third in European industries by VC funding. And as I said, they have 26% decline, but that's less than the European average of 37. However, when we take out EV batteries and EV charging, we see half as much funding and twice as much decline. So that stability is in part due to EV and battery and charging solutions. Next, looking at the types of business models, here we see that in 2023, the majority of VC funding went to SaaS and manufacturing businesses. Here we take out EV charging and EV battery, which would be even more scaled by manufacturing and SaaS, of course. And we see a story of marketplace that has been consistently decreasing. Actually, in the period of 2012-2021, they were the biggest share of VC funding, especially because of segments like car sharing, car marketplaces, etc. But since then, these have had issues with bankruptcies, profitability, fewer new companies in those segments have joined the market, so that share has continuously decreased in the past years. All the while, SaaS has been growing a lot, the technology as well. Here's kind of a similar story looking at the client focus. So B2B has actually doubled its share in the past decades, while B2C has continually decreased. I think this ties in a little bit with the marketplace, etc., because marketplaces are often B2C focused, while SaaS and manufacturing can be more B2B oriented, though that's not always the case. And of course, B2Cs have sometimes, in mobility especially, a bit more complex business models. It's really hard to reach profitability. To gain market share is complicated. I think I saw an example of a bike sharing company, an electric bike sharing company. There's only one that's profitable, that's Forest, and that's because they also rely on ad revenue and not just consumers. So yeah, it shows a picture. Next, looking into corporate funding, we see their presence growing every year. Actually, this year, they pulled more funds into European mobility startups than VC investors. And when we look at what are they investing in, here again, we see kind of the same bets. They're also placing bets on top EV battery and EV charging companies, and in the top rounds of 2023. Oh, and I forgot to mention also, actually in the report, we did a deep dive on Siemens and Skeleton Technologies, which is an EV battery manufacturer, and we look into their strategic partnership. So maybe after the webinar, you can go and have a look at that. Next, looking at exits. So this year, in 2023, we saw a record high M&A activity. Most of them are, of course, buyouts and acquisitions. We're not really seeing any more IPOs and SPACs, as you mentioned earlier. We're seeing a lot of bankruptcies and, again, a lot of involvement from corporates, mainly European mobility companies who are acquiring their peers. So this leads really to a very big market consolidation. A few examples, I know in Netherlands, we talked a lot about Van Move being acquired by the McLaren subsidiary, or Emmy buying Felix. Things like that really show what's happening. Next, looking at the top investors. So we can see a big variety. We see some specialists, we see some generalists, we see some governments being involved. Here, the top funder is still EIT Urban Mobility, the European funder, which has done even 62 rounds just in 2023 alone, which is very impressive. And lastly, looking at unicorns. So currently there are 44 unicorns in European mobility, 22 of which were actually created between that bubble of 2019-2021 period. And from those, 9 lost their unicorn status either by having a lower valuation, being bankrupt, or things like that. And in 2023, we only saw 1 new unicorn being minted in European mobility, and that's Verkor, the EV battery, the French EV battery manufacturer. And now I'll take it over to Vincent for the rest of the report.
Thank you very much, Eglantine. Vincent, what can you tell us about the trends and geographic insights?
Sure. Let's dive a little bit on the trends, also on the geographic insights part of the report. Sub-segment-wise, unsurprisingly, as Eglantine said, EV infrastructure-related startups made the top in terms of funding. So it's normal to see that vehicle production and maintenance and aftermarket, both sectors encompassing the EV battery and the EV startups, ranks the first in terms of funding, respectively 3.8 billion and 2.1 billion in terms of funding. But another interesting insight is about the sector that witnessed a sharp decrease compared to 2022. First, looking at mobility. This sector encompasses startup helping people moving from a point A to a point B, as it was already said. Such business models that are often, marketplaces, ride-hailing, also shared mobility operators, all struggled in terms of operations, and since some of them went public, it has shown to investors how difficult it is to find, I would say, a sustainable business model, great unit economics. So no surprise that these sectors witness a sharp decrease. Another interesting focus is about the logistics sector. When we first published the report back in 2021, but also in 2022, it was the most funded sector. In a post-pandemic era, there were need for better logistics, better software in order to orchestrate the e-commerce and the increased demand for online purchases. So the sector witnessed, I would say, mega rounds in the past, so rounds that are above $100 million. And as it was already said at the very beginning, 2023 was really lacking of mega rounds. So this is why we can see such a difference in this sector, while we expect that the sector should continue to drive new fundings in the coming year. Talking about funding dynamics, it's also interesting to make a focus that in a super hot topic in mobility, which is the e-mobility. Like it was said, the EV startups raised a lot of money, and for the first time, EV-related startups amounted to 66% of the total funding in 2023. So it's for sure it is mainly driven by the mega rounds and all the investments that were put to the EV battery and EV infrastructure. But since charging and range anxiety is one of the top, I would say, concerns for consumers to shift to e-mobility, it's interesting to see that both startups and investors are kind of aligned with the fact that these challenges must be tackled. But when talking about decarbonation in mobility, focusing on the combustion, the emission part isn't enough. When we all acknowledge that transportation accounts for 30% of the total greenhouse gas emissions, we must adopt, as investors and startup, a comprehensive overview of the entire life cycle of a vehicle. In the report, you'll have a chance to deep dive more into the mapping, the landscape of the startup that are addressing the production, the during life and the end of life parts of the vehicles. As investors, we have to admit that we're super focused on the end of life parts of that spectrum. This sector attracted 1.3 million in investment in 2023, especially for battery recycling. It is an impressive 25 times increase compared to 2022. But extending the lifespan of a vehicle that is on the road is also a good answer to mitigating its emissions on the road. And the during life sector appears to be the least funded, the least interesting for investors, since it only attracted under 90 million of investments. So we should find more startups to fund in that segment to make mobility really a decarbonate solution for the emissions. So talking about the entire lifespan of the vehicle, we need data precisely to understand where the focus should be put in order to decarbonize mobility. And now I'd like to make an emphasis on the carbon offsets and tracking in the mobility. So let's talk about it. All sectors, when talking about all sectors, these segments attracted above 1 billion in investments since 2020. So it is a real trend in the VC industry. We can think about startups like Plane A, for instance, but these startups are covering basically a lot of use cases that can be either in transportation, in retail, in healthcare. It doesn't matter. And interestingly, there is only 2% of that funding that went to transportation-focused carbon tracking and offset solutions. So we are already anticipating a boom, a growing share of that investment that is going to mobility-focused startup. Why? Because beyond tracking, I would say, the Scope 3 emissions, mobility has its own needs, I would say. We need to track mobility-related data about the mapping, about how the vehicle is built, the driver's behaviors, and so on and so forth. And a good example of such startup is Clearly, that is part of the top 10 of the European Startup Prize for Mobility, since Clearly track at the trip level the emissions and also aggregates, I would say, new complementary data when it comes to the carbon emissions. So their clients are able to have a precise and comprehensive overview of their mobility-related carbon emissions. But this need for better understanding, I would say, where are the carbon emissions coming from is driven by regulations since the CSR directive. And we all know that corporates should be the first mover into decarbonizing their mobility, starting by their fleets. And this is the story I would like to focus on now. We have to admit that corporates are kind of slow at moving to full electric because of real issues that need to be solved. It's the difficulty to plan the transition, to understand what it is involved in terms of funding, and to what extent the operations will be affected actually by the shift toward fleet electrifications. And it is already anticipated by startup. It is true that this niche only received 33 million in funding, but we're expecting this startup gaining more and more traction in the coming years, since there is again real pressure both from consumers and regulators to decarbonize corporate fleets. We can take, for instance, the example of Nelson Mobility, which is a French-based startup that recently secured 1.2 million for its SaaS solution, helping corporates and big enterprise to first plan and understand what is at stake when it comes to decarbonize the fleet, and second, a software fleet management solution for managing the fleet. Now, another interesting story to tell, not directly related to the decarbonization, is autonomous vehicles. Yes, it's not dead. This sector remained proved to be quite resilient last year compared to 2022. I'm sorry. We saw that in the US, you have all the stories about the Cruise, the robo-taxis, and so on that are mostly B2C solutions, and also all the challenges that are they facing with the accidents and so on. In Europe, it seems that the ecosystem approached had a different approach. Actually, it's mainly B2B. With lots of industrial cases, but also all the famous autonomous shuttles that are, I would say, operating in a closed roads. Comparing the US and the Europe is always interesting, since we all know in the innovation and the startup ecosystem, they often, I would say, lead the way for new innovations. And now I'm super happy to tell you that Europe is catching up in terms of funding with the US. While the Europe is at 9 billion in investment, US is at 10 billion. And as you can see on the slide, US has witnessed a bigger decrease in terms of funding. So Europe proven to be quite resilient, and it was already explained by Eglantine, but also by myself when talking about the summer industry. It's mainly driven by the EV startups. The European market is maybe more mature for the adoptions of such solutions because, again, of the increasing pressure from the regulators. And now let's zoom also at the macro level of what is the place the Europe is taking at the global level. We can see that Europe has actually increased its share of total funding at the global level, coming from 22% to 28%. And the story is even more interesting when we focus on the early stage, so all the deals that are less than $15 million coming from 32% to 39%. This is something that we can be proud of, and we'll have a chance to have a chat about this interesting figure with Theodora and Lucas to understand why the European market is really resilient and innovative like that. But now it's time to talk a little bit about the countries. Let's zoom in on the countries. We can see that UK ranks first, followed by France. Both countries have witnessed growth in terms of funding, but not for the same reasons. UK had bigger rounds, basically, in the autonomous vehicles. For instance, we have Conidigital that raised a significant amount of money, while France witnessed a lot of funding, but a lot of, I would say, middle-sized funding. So proving that this ecosystem is really booming and not too concentrated, I would say, on such areas. A great story also to focus on is, I would say, the comeback of Norway that went from the 11th place to the 5th place in terms of funding. Interestingly, Germany witnessed a significant 60% drop in terms of funding, but we know that this ecosystem is mainly driven by logistic-related startups, and as we said earlier, this sector proved to have some difficulties, at least in terms of funding, for 2023.
Thank you, Vincent, for sharing these elements. We'll now be hearing from Martin. Martin, after introducing yourself, could you please tell us more about valuations trends for European mobility startups?
Sure. Thank you, Jenna. So hi, everyone. I'm Martin Viel. I'm one of the partners with Clipperton, which is a tech-focused investment bank. So we had a chance to look at the data that Diluum provided on mobility startup. And what is interesting in terms of when we look at the valuations in 2023, obviously there's kind of a drop in terms of, I mean, all the buckets of valuation have witnessed a drop in 23. So it's not only like bigger rounds or smaller rounds which have been affected by this reduction in valuations. It has been said by Glantine and Vincent earlier, but what is really striking is the disappearing of mega rounds that were driving obviously valuations previously in the past. So there were a couple of those in 21, 22, but very few, if not none, in 23. So obviously this affects the average in terms of valuation for mobility startups. So you see it on the right side of the slide. The average valuation for funding rounds of mobility were close to $100 million in 21 and 22, whereas in 23 this number has dropped barely at the level of 20, so at 62. But in the same time, what is interesting is the fact that the median valuation has continued to grow, which shows that there is a real resilience in terms of how investors value mobility startups, and there's a clear long-term trend, towards increasing the valuation of these startups, which are obviously getting more mature, more robust, which drives the valuation. If we move to the next slide, so we've looked at obviously different stages and where is the valuation. So obviously you see on the left side of the slide, late stage rounds are, I mean, more or less valuation in the north of 30 million and above. And again, what we see is that there are very few rounds above 500 million and 1 billion, which is something that we used to see back in 21 and 22 again. But yeah, I would say that what we call acceleration stage rounds have a valuation north of $10 million for half of them. The rest is more in the range of more than 30. And lastly, what is interesting is to look at the business models. I think Eglantine said it earlier, but obviously marketplaces were, I mean, a big chunk of the mobility funding back in 21 and 22, and the same observation can be made with the valuation. You see on the slide that the valuation of marketplaces were very high in the past and has significantly dropped in 23. The same goes for manufacturing, but what is interesting is the trend for software businesses, software business model and SaaS has been pretty stable actually. So it's not a surprise that valuation of SaaS startup, even if it has reduced slightly in mobility, has remained fairly consistent with the previous years. So SaaS has been less affected in a way, given the resilience in business models versus other business models in mobility.
Okay. Thank you very much, Martin, for sharing your findings in this report. To complete those insights, we thought it would be great to have a little fireside chat with two VCs, represented here by Theodora Preda and Lucas Lowers. Lucas, you can join us now, and Theodora is also going to join us from a distance. Hi.
Hi, everyone.
Hi, Theodora.
Hi, Theodora. Hello, Lucas.
Hello.
Hi, guys. Welcome to the both of you. It's a pleasure having you here with us. Maybe before we start, you could introduce yourselves.
Yes.
Ladies first.
Ladies first. Theodora, go ahead.
Yes, perfect. No, I'm Theodora. I'm heading the ventures team at Startup Autobahn, powered by Plug and Play. We are the flagship mobility open innovation platform, which has been established in Stuttgart, in Germany, about 8 years ago. And I'm proud to say that over the years, we have built a strong track record of around 500 pilot projects that we initiate with young tech companies in mobility on the one side, and on the other side with our corporate partners such as Mercedes-Benz, Porsche, Bosch, and many, many others. And then I'm also leading the mobility investment side at Plug and Play EMEA. Most of you probably know about Plug and Play. We are one of the most active early stage investors globally. And in a good year, we do about 200 investments. And we've mentioned quite a few startups today. I think Enride being one of the most characteristics for mobility unicorns, and proud to say that Plug and Play is also backing Enride. And handing it over to Lucas for his intro.
Hello, I'm Lucas, based in Paris, working for Rethink Ventures, which is a German VC fund based in Munich. We are like a 50 million fund. We're quite a new fund. We only got created 2 years ago, but we did quite a few investments last year actually. So in total 9, 7 which were already seen by a deal room. I'm taking care of the French ecosystem, but also then looking at everything that is European. We like to invest in mega trends, right, such as logistics, EVs, batteries, fleets, optimization, which is very important. And we also think that will continue, right, because only 1.4%, as I learned today, of the fleets are electric. And we typically invest tickets of 500K to 1.5 million, come in very early, and are specialists in this space. So we think that we understand the space better, but time will tell if that's right.
Yeah. Sure. Perfect. Thanks, guys. Let's get started then. So as we've just learned, the European mobility ecosystem just witnessed a 30% decrease in funding. VCs shifted their focus from growth at all costs models to sustainable growth and a clear path to profitability. As VCs, how do you guys reflect on the past year and what has changed compared to previous years? Maybe Theodora first, if you want. Ladies first.
Yes, absolutely. I mean, if we do take a step back and we look at the overall European VC landscape, we see that there has been a 40% decrease, right, in the activity. And that was mostly due to macroeconomic conditions. So we had a lot of tech layoffs, we had some startups closing shop, we had lower valuations, we had a significant slowdown in the number of mega deals that we've seen. But nonetheless, I think on the positive side, mobility fared better. So with only around 30% decrease. So that's something we should obviously keep in the back of our minds. And then at the same time, if we were to neglect 2021 and 2022, which we would regard, I think, in general as exuberant years of very high activity, maybe a bit irrational activity on the VC side, then I think mobility has actually seen an increase, right? We have noticed a 50% increase compared to 2020. And then in the bigger picture, overall, mobility is having its third best year in the past decade. So there's a lot to celebrate and be optimistic about. And obviously, with e-mobility and sustainability being very important topics, I think this will only drive us towards better and better startups and founder results. And then when it comes, maybe one more thing to the plug and play investment side, I think last year we've also noticed that we've taken things a bit slower. So it wasn't so much about the number of investments, but it was more about the high quality of the deal flows that we were generating. We were focusing a bit more on high quality, on startups that are being defensible, that are building solutions facing the hard problems that we're facing today in the mobility space. Just a couple of examples, I think about energy was also mentioned as the top startups in the beginning, is also one of our portfolio companies. Then vehicle would be another example of startups in the deep tech e-mobility space that we've backed last year. And then just thinking about it, I think bridge rounds were also quite active last year. I don't know what Lucas thinks about it, but we've seen quite a number of these seed extension deals, pre-Series A deals, or however you want to call them, signaling that startups were not ready to graduate to maybe a Series A stage, and they were coming back to the market asking for additional funding and buying time before they can have more clients onboarded and graduate successfully. But curious to see how Lucas thinks about it and if he has seen the same.
Yeah. We only invest in top quality teams. If you look at it, the big thing that changed, the huge thing that changed, actually, are interest rates. That went up a lot. Inflation went up, so there's no more cheap money, and that just drove everything, right? So there's a big fear of recession today. Stock markets also even went down, even in China, which is crazy. And the exit market just became very unclear. So today, if we invest in a company, we also want to make sure that one day we can actually sell it, but we don't know how the conditions will be in 5 to 10 years, because actually this takes a long time. Down rounds also became more normal, unfortunately. So actually some very small funds also didn't perform well. And that also drove them to difficulty because it got very difficult for them actually to raise a new fund, right? So raising a new fund right now takes much longer than it was in 2021, 2022. But we actually managed to raise one, so we're very happy. And in the end of the day, this new market environment also then dropped valuations. That makes it a bit easier for us, and we're quite happy to have a new fund, right? Which actually was able to invest in 2023 and not in 2021, when it was crazy, right? Competition was also crazy to get into deals, and literally everything got funded. Today, good teams still get funded, and we're happy to be there to help them, right? To finance innovation.
Yeah, sure. Yeah. Yes, but last year was really interesting in a sense that there was a shift, I would say, in terms of VC analysis, I would say, when it comes to assessing the new deal flow. So you said it's all about great quality teams, I would say, maybe also to look at better unit economics, so you can reduce the uncertainty when it comes to exit, either it's for getting new fundings or not. And we all talked about it. Some startups raised money because they were operating with a great product that is answering a real need in the e-mobility. We expect also new startups to be founded in the carbon tracking and offsets and so on. I would say beyond the characteristics, I would say, of the startup, what are your expectations for the coming year in terms of trends? What do you anticipate as a booming sector, I would say, as investors? Maybe starting with you, Lucas.
We look at very large market opportunities, right? For example, we look at e-mobility, right? I mean, everyone has to drive an electric car at some stage. 2035, hopefully, there won't be any more thermic engines sold, especially in Europe. Well, let's see if that stays that way. In Germany, there's some politicians who are trying to lobby against it. CSR is also driving the game. So actually, regulation is driving many of our investments, right? Sure. So CSR will increase, carbon tracking will increase. So we did one investment actually into Ship Zero, that is tracking carbon emissions across the supply chain. So we think that is a mega trend. What else? There's also new categories that are now emerging thanks to regulation again, right? So you really have to look at the whole market in order to drive your investment thesis. And one thing that is now emerging are drones. So we do see a new category of drone startups that is now coming to the market, and we look quite actively at it. And I believe, one day it will be actually possible to get your meal delivered by drone, or maybe also your, medicine. So we look at those big trends that will also be here in 10 years, right? Because in the end of the day, this will take 10 years, right? Sure. So if you invest right now, we hopefully will be at the table still in 10 years, if it all goes well.
Yeah. What about you, Theodore? What do you expect as a growing trend, I would say, for the future?
Yeah, absolutely. No, I think EV battery technologies are really, really important. And we have seen a number of innovators coming to market, both on the battery chemistry side and battery materials, and optimizing the way we use raw materials in an efficient and sustainable way, but also on the software side of battery. And I'm quite excited about this market, especially in Europe, because we are seeing around 30 gigafactory plants being established in Europe in the next 5 to 10 years, right? And these will all kind of encourage a next generation of innovators to come to market as well, be it for the chemistry material side or the software side. So talking about design, R&D analysis tech, different type of manufacturing, analytics, process control that will be needed to be monitored within these plants. So this is quite exciting. And I think there's also a lot of policies, as we've mentioned, that are coming now more and more to the front in the market. Last year, we had the EU Green Deal industrial plan being announced for the first time, and it covers a lot of climate tech, right? But especially it also focuses on batteries. And within batteries, I think there are 3 pillars that they're covering. One of them is carbon footprint tracking for the batteries. So we would need new type of solutions and technologies to be able to track across the supply chain and make diligence across the supply chain for different materials. We recently invested in Circular in the UK, which is actually active in this market. Then we're talking about domestic battery recycling and battery circularity type of topics. And in Germany last year, we've seen quite a lot of startups, Scilib to Zero being some of them, working in the battery recycling space and raising a lot of funds here. And then the third pillar would be, I think, digitalization, but more in the form of being able to create smart labels or producing battery digital product passports that will be needed in the future to track the materials and the way these batteries are being created, to make sure that they are being recycled and used as a second time along their lifetime. So battery tech and charging tech, I think, are some topics we're very, very excited about, and we've been backing some really good founders in this area, looking forward for the next 5 to 10 years for when they can come to market.
Thanks, Theodora. It's interesting to have 2 German VCs here, one that's part of a very active European early stage fund and the other of a global early stage VC. We saw that Europe is catching up in terms of funding compared to the US. It is way more resilient and it maintains its position as the most innovative place in mobility. How do you guys feel about that?
Well, the US remains a car country, right? I read an article in The Economist that is actually the easiest country to drive a car, right? Because roads are perfect for it. But the US economy is still thriving, right? However, some of the bigger players were not really performing well last year. So we had Cruise, big problems, big layoffs, Waymo, also some issues. In EU, we do see enough good deal flow, right? Especially when we look at our CRM, which I love, and also a lot of public funding. So, for example, in the battery space, there are some deep tech topics, deep tech startups, and actually there's very good funding also in France for that, right? So that's very important to help those young teams, come to market, but also help them to develop an innovative solution, which might take years, right? It can take years, and so it's super important to actually fund that. And I think if you are, in the end of the day, an early stage team that has a lot of quality, that is good, with a good product, with a good idea, and that works together well, you will also get funded. That shouldn't be a problem.
Okay. What about you, Theodora?
Yeah, I agree. I think early stage deal flow is amazing in Europe, and overall, Europe has been the top region when it came to new startup foundation and creation. So we have outpaced the US over the past 5 years. And I think last year we've probably created 15,000 new startups. And then, we have all these great universities, research institutions, and from an academic perspective, we are top-notch when it comes to deep tech talent, engineers, and researchers. And then if we marry that with a bunch of early stage VCs that are locally here in Europe, ready to support the financing needs of these early stage startups, I think then the picture becomes quite clear, and it becomes obvious that e-mobility, being part of this general trend of sustainability and climate tech, has been forging ahead and has had a really good year in 2023.
Okay, maybe in one sentence, just so we can take some questions coming from the audience. How do you see the VC funding trends for 2024? The year I'm thinking about how investors really willing to invest again in 2024. We all know that there are a lot of dry powder in the market. Many funds raised in the previous year, but they're not so fast at deploying capital. Maybe starting with you, Theodora.
Yes, absolutely. So I would describe 2024 as a year of cautious optimism. I think market conditions are still uncertain. We have this mega global election year ahead of us, a lot of uncertainty, a lot of change happening, but then also a lot of reason to celebrate. So I think in terms of deal volume, there was a survey recently released by Atomico, where all the European VCs were saying that they expect more deal flow and they expect to be more active in the market in 2024. So, you know, for all the startup founders tuning in, please hang in there. Funding is on the way, help is on the way. And then apart from that, I think I'm still very excited about our European talent. I think right now we're focusing on, you know, the hard problems, and we have more deep tech knowledge in Europe than we had 10 years ago. And we're ready to start building something. So we're not just going to copy paste what has been happening in Silicon Valley. We're not just going to be focusing on the vitamin type of applications. I think from now onwards, European founders are ready to build their hard tech solutions that will come to market in the next 5-10 years. So pretty excited overall about the European space.
Very optimistic feeling. Is it the same for you, Lucas?
Yeah, we're open for business. So send us your deck, founders. We are looking forward to receiving it, and we're going to do a few deals this year, of course. So we're actively screening the market and very optimistic about 2024, also 25. Of course, in its election year, we know that Trump might win, which might change the world economy a little bit. But in the end of the day, we're looking for mega trends, right? And we're looking to solve big pain points, and those pain points will also be there in 5 years.
Sure.
Right? And those are the things that we are looking into right now. And yeah, so if you're working on one, then just reach out to us.
Thanks, guys, for answering our questions. It was great having your views as VCs. We're now going to move on to the last part of this webinar and answer some questions. We already have a few. The first one is from Antonin. How can we explain the slight decrease of e-mobility investments since 2021?
If you wanted to take the question.
How can we what, sorry? Can you repeat?
How can we explain the decrease in
decrease,
funding for e-mobility?
The decrease in funding. Well, 2021 was a bull year, right?
Yeah.
So when I moved back from Hamburg to Paris, I think I did 40 interviews with just scale-ups in 1 month. It was crazy. That all raised over 30, 40 million. This has completely changed, right? I mean, money got very expensive, so interest rates rose, and people got much more cautious.
Yeah.
Because at some stage you also have to exit your portfolio company, and if the exit market is also very complicated, because also corporates, of course, are in difficulty, then this drives your approach as an investor, right? Yeah. And now they're looking at unit economics much more, and there were also some very big failures, right? So actually people got burned. Look at Tia's story, look at quick commerce, it's not existent anymore, right? And there was a lot of money put into categories that in the end of the day didn't solve any real pain point. So we wouldn't invest in, and I don't think people would invest in shared scooters or quick commerce anymore.
Yeah, sure.
Next question from Gabriel. What advice would you give to a mobility startup looking to raise capital in 2024? Maybe
for you, Theodora, if you want to take it.
What advice we would give to startup founders? Yeah, I would say focus on the problem first would be my first piece of advice. Make sure that you're solving a real problem, because purpose-driven and mission-driven startups are more likely, I think, to raise funds also in 2024, as it was the case in 2023. And, make sure you surround yourself with really strong co-founders. I think it's very important to have a balanced team. In general, we say that it's better when you have a team of 2 or 3 to move the startup initiatives forward. I think solo founders are not something that we are in general very positive about. So I think those would be just some key aspects. I don't know if there was a second thought about this, Lucas.
Yeah, we're also looking for strong teams, of course. Ideally diverse teams if possible, with women. We welcome that a lot. We're actually looking out for that a lot. Yeah, clear business models, I believe, solving a real pain point. I mean, the usual, right?
Yeah, sure.
And also first traction. I think this is something that we are really keen on. Like, we wouldn't just give, well, if the team already has done something, so they're just serial entrepreneurs, then we'll just give them a blank check. But otherwise, we're actually looking for real traction and real conversations with real customers that we would also then, check upon.
Yeah, it's true, because for the previous year it was so easy to raise money that maybe this aspect was neglected for many founders. You talked about the quick commerce. I recall in 2021 these guys raised 4 billion and they all bankrupt basically now. Yeah, so because
too
much cheap money. I remember when I was going to the subway, someone was giving me a flyer with a 20 euro. I received a voucher for ordering some stuff on the groceries, and now it's completely disappeared because there weren't any hard problem to be solved.
Yeah, and I could just go to the supermarket as well. All right, that is 5 minutes away. So.
Next question from Pablo. Do you see more EV charging solutions oriented towards fast charging or intelligent charging, and what conclusions are to be made?
Well, we are interested in new use cases for new types of vehicles, right? And one thing that is underdeveloped right now is heavy-duty vehicle charging, for example, truck charging, right? Yeah. But it can also be then a utility charging, of like very big, like, for example, bin trucks, picking up the rubbish. So that's something that's super interesting. I think it's very important also where you place those charging sites, because actually some are not making any money, right? It's actually a low margin business. And we've done some investments already in the EV space. But they are in niches that we believe will be very important. So in the end of the day, the shovels for the people building this, right? But we are not an infrastructure fund, so we would not go for a round like Electra or something. I believe should be done by bigger funds that will actually build it up.
Okay. The next question is from Amy. She asks, are there any investments focused on battery swapping, AE batteries?
Yes. No, actually, Theodore, I'm also curious to have your take on that, since you have that global coverage. We're starting actually to see batteries as a swapping model. So yes, to us, we can think of the Indonesian-based startup for focusing on batteries swapping for e-scooters. Same is happening also in Brazil, and we're starting to see models for battery swapping for precisely logistics. Utilities and so on, since main issue for these guys for shifting towards e-mobility is tackling all the operations that are around that. And I would say a vehicle that is parked for being charged is a vehicle that is not working actually for the operations. So such models can work. But it is interesting because besides, I would say, battery swapping, you have the off-the-grid charging solutions that can be deployed really easily, can be moved depending on the operations, and so on and so forth. So yeah, we do see some investment in that space, but who knows if it will be the solution that will answer actually the operational problems, I would say, for the B2B side. So, and Theodora, this is why I'm curious to have your take on that.
No, I think that perfectly summarizes it. I was just gonna say that battery swapping is a bit more popular over in Asia. So I think in Europe, if we also want to increase adoption, we can learn or take notes a bit from what's happening over there. Also in terms of battery swapping for cars, I think NIO being one of the main drivers of this. The concept has been around for quite a while. I think it just hasn't built enough traction in Europe yet, but I agree with what you said, Vincent, about this having all the positive requirements to help us solve battery usage.
Thanks, guys. I think we can answer maybe 1 to 2 questions again. The next one is from Benjamin. In the during life section, has the retrofit trend and startups completely disappeared from the radar?
No, I wouldn't say it has disappeared.
I mean, there was a huge funding round recently,
Yeah.
right, of Upway that is retrofitting bikes, which makes a lot of sense because actually e-bikes of good brands, for example, with a Bosch motor, actually can travel many, many, many miles, right? We saw one the other day that did 80,000 kilometers on a Bosch motor, which was quite impressive. So that's even more than a car. And we believe in those circular business models. We don't see many deals in it, unfortunately. But there's another fund in Paris called Shift for Good, right, that is investing in such models. And for example, they invested in ex-Phoenix Mobility, Tolf, right? That is actually, retrofitting their utility vehicles. So there's something there, definitely. However, maybe sometimes it scares investors because they don't really get it, because there might be a lot of hardware involved. So this is something that might not be easy for them to grasp.
Last question from Johan. In which areas do you see significant early stage activity with lack of well-funded startups and scale-ups?
Many. Actually, that's a super broad questions, but back maybe to the findings of the report, I do think that for the production and the during life aspects of the entire life cycle of the vehicles, there are rooms for improvement. Still, for the production, it requires a lot of investments. It necessitates for a startup to develop a great tech that is able to be plugged, I would say, with the big manufacturers, the OEMs, and so on. So not an easy challenge, but still, it's interesting to expect, I would say, the new funding in that space. And again, in the during life part of the life cycle, we should have really more and more, I would say, funding. For instance, we're supporting BAT Connect at the Move Lab, France's leading startup accelerator for mobility at Station F. They're retrofitting, I would say, small vehicles, mainly for leisures, for I would say logistics and so on, and with a circular approach. And this is exactly the type of startup that we need for extending the lifespan of the vehicles. I don't know if Lucas or Theodora, you have a take also on that.
Yeah, no, I agree. I would say at the early stage, we are very good in Europe at backing founders across industries, not only across different segments within mobility. I think at the growth stage, we still have to grow up a bit in Europe and, catch up with what's happening in the US in terms of growth stage financing, because we are not maybe supporting well enough our founders to stay in Europe, maybe to IPO on the European market, stock exchange markets, or to have an exit here. And sometimes we see that they fly over to the US for the grand finale, which is, I think, something we should pay more attention to in general and try to incentivize more with funds and with different types of policies that can support it.
I think that's it, guys. That's a wrap. Thank you all, guys, for attending this webinar by VID and G-Room. We're very sorry if your question wasn't answered. We'll try and answer it some other way. We hope you enjoyed it and learned more about what happened in the European mobility ecosystem in 2023. Thanks also to our speakers for sharing their insights. It was a pleasure having you guys here. The report State of European Mobility Startups 2023 is now available to download on our website. A QR code will be shown on your screen in a few seconds, and a link has also been shared in the chat section. So thanks again, guys, and have a great day.
Thank you.
Thank you.
Thanks.
VID and Dear Room for inviting us.